Welcome to this episode of the Startup Show. Today, I have the big honor and pleasure to introduce you to Adriano Lucatelli, an entrepreneur himself in the finance sector and also lecturer at the University of Zurich. So welcome to the show.
Thank you, Cedric. It's a pleasure to be here.
Welcome back to the Startup Show. I'm very excited to have today Adriano Lucatelli on my show. It's really exciting. Recently, we started to get more into the innovation and academia part of startups, and it's really exciting to have you here. Thank you very much for taking the time. Maybe give us a little bit of background. You have a very interesting CAE resume, obviously. Maybe give us a little bit of background of who you are.
Thank you, Cedric, for being here. I'm a traditional guy. I basically did what everyone else does in Switzerland, goes to school, university. I spent some time in the US and in London and came back, started with Credit Suisse, ended up at UBS. But I figured that there must be something more exciting out there than just working for a big institution. So I left and created several startups, truly startups with nothing but an empty office and no phones and no lines. So that was exciting, and since then it's clear I want to stay in that area. Luckily enough, the University of Zurich asked me to teach, which I absolutely wanted to do because young people are so energized and challenge me all the time, and I can benefit greatly from the new generation.
You recently, or not so recently ago, you started your latest venture. Maybe you can tell us a little bit about like what exactly are the startups.
The latest startup is called Decartes Finance. The name goes back to the French philosopher who created modern philosophy, basically in Europe, a rationalistic style. And we figured that we have to do something else than traditional banks. You cannot compete against established brands. So you have to do it differently. Why are we different? We do only rule-based investments that are easy to code, so to speak, no emotion, at low cost for everyone. In the sense, we wanted to democratize finance and investing and make it possible for everyone to benefit from top-class knowledge. So my basic goal is to find unique asset managers, bring them on board on our platform, and have our clients to choose. It's basically like Airbnb or Booking.com. Bring the new insights from sharing economy to finance. You know that finance so far, or wealth management, has been an obscure industry, so to speak, because there wasn't much transparency, no transparency about how you do the investment. You have a black box. You trust your client advisor, which is important, but you don't really know how they create your product, your solutions. It's intransparent in terms of pricing. You don't know. Not even within one single bank. You might have different pricings for the same service. So we wanted to change that and use the new sharing economy insights for finance. What does that mean? It means that we make it possible for clients to rate us. There is a button in the cockpit where they can say, Adriano, your system sucks or is great, 1 star, 5 star. So other clients can engage and see, others liked it, so it must be cool. We want to have a platform of best-in-class asset managers to compare. That's what people want, the platform. And we want to match like Uber. So we don't own a bank. We don't own asset management, but we are very strong at it. Yeah. Because we involve that. Technology makes it possible by disintegrating the value chain to get all the best-in-class providers, because a bank is not necessarily the best owner of all its services.
Right. You compared yourself to Uber, which is already very difficult. If the moment you start comparing yourself to one of the big unicorns, it's getting tough.
Yes.
But I do want to point out one little thing, because a main difference I see, and I'm only doing this comparison because you did that. Uber is a service I pay for. I want to go from A to B, I pay $10, 10 Swiss francs, and this is done deal. In finance, especially asset management, especially banking, I want to see a return on investment bottom line.
Absolutely.
I want to know that, like, when I put my 100,000 in saving, I wish I had, but let's say I put my 100,000 in saving.
Soon you will.
Let's say I put my 100,000 in my savings.
Yeah.
I want to know that at the end of the year, I have at least, let's say, 1 to 5% in return on what I invested, which is definitely difficult. What we discussed also before this interview with the negative interest that we have at the moment. But like, how do you see that, like, you know, bottom line, you also want to get some kind of value to the customer in terms of return on investment. Do you see that as something that you can provide?
We can. I don't see.
It's not all about the service that you get from the asset management.
The performance. That's what I mean. That the performance. Yes, of course. You have to reach for the stars. That's why I like Uber. If I will ever become a unicorn, who knows? If I don't try to reach the stars, I will never reach. So, no, coming back to your valid question. Yes, the client using Uber knows I want to get from A to B, and it might be fancy or not. I can rate the driver and walk off. But that's the same. We have surely we have a longer term view. The taxi client or Uber client has a span of maybe 10 to 30 minutes. Yeah. We have a period or we try to outperform the average portfolio over the course of maybe 5 to 10 years, clearly. But by applying rule-based, scientifically proven strategies, the likelihood of providing a consistent and transparent performance that beats the average portfolio, because that's the benchmark, is pretty high. That doesn't mean that we will not have years with negative returns, but that would be true for an average portfolio as well. And I think in the finance industry, we should start to justify our high price. We are in the luxury business, basically. Private banking is a luxury. And you get direct access to your client advisor, best-in-class solution. So we charge that, but we also need, as you correctly say, proof that in the performance. And by taking out short-termism, by taking out emotions, by employing even algorithmic-based strategies or even artificial intelligence technology, then we surely will bring value to the client, but not in 10 minutes.
No, for sure. But again, like in that kind of business, it's very like this, probably, as long as you get a positive return, whatever that might be, happy clients. At the moment, like it will be negative, then
you will have
then
negative.
It's when it's going to be difficult to explain to the client why and
why.
When. Yes.
And then it's good to be transparent and algorithmic based. I think what the client wants is that he gets from A to B, but he knows that if there's traffic out there, it might take longer. He knows that. It's transparent. The driver can say, okay, it's gonna take you 15 minutes later because there's an accident or roadblocks or whatever. That's transparency. So the client can say, oh no, I take the tube. Oh no, I wait, I cancel. But that's only possible when you are transparent and it's logic and evidence-based and rule-based. And that's what has been missing in Switzerland. I'm not saying the whole industry has been intransparent, but I say that it's our goal and it's our duty to increase our performance and be more transparent, because I think we serve a cause. I mean, we work with digital assets. We don't produce a nice watch, Patek Philippe, we don't do that. Unfortunately, it's even more important to give purpose to our business. As Robert Schiller, the Nobel Prize in Economics, he said we need to help people. And that's what I say. I absolutely agree with him. If we cannot bring purpose to finance, there's no use for us. Because people need to save for their retirement. People need to save for their girls and boys to go to college. We need to provide that service as cheaply as possible and as efficiently as possible. And when we do that, if we succeed in doing so, we have a huge leverage in our society.
Yep.
And that's my goal. And technology makes it even easier to do a good job.
Yeah, yeah, absolutely.
So I like that.
I hear it. Let's go. I want to pick your brain a little bit about you as a lecturer for political science at the University of Zurich. I like it because it gives a little bit of an academic approach also to my startup show.
Yeah.
We discussed a little bit about startup valuations, methods to evaluate the valuation of a startup. And they teach me, and I just finished my bachelor about 3 years ago. NPV is king, and DCF, and all of those models, Black-Scholes. I know them all.
Yeah.
Where do we stand today? Are they still applicable?
They're absolutely applicable. I would not suggest to change that, because in the end, I would even go further. In the end, cash is king.
Cash is king.
It's all about free cash flow. But what I understand, what I want to tell, that's why I have a political touch to my finance course. What I want to tell my students is, look, it's all okay to have these models, and I use them myself. I mean, thanks to Markowitz, we professionalized our business. Our scholarship has been improved, so to speak, thanks to these bright guys. But we need to understand that the input factors are highly political. I mean, who would have thought, as we discussed earlier, that we might have negative interest rates? What are you doing now? It's one thing to have negative interest rates as an input factor. The other thing is I cannot take money, the risk-free return at 0.75 in Switzerland, to give an example. So 0 is the lowest. So the whole model does not work, because its assumption, like Markowitz did CAPM, assumes that I can get money at the risk-free rate, which is not true here in Switzerland. Unfortunately, I would love to take money and get paid for it and then invest it, but that's a political thing, and I want to make my students a bit sensible that the models are okay, but in the end, it's the market and it's politics that have a big impact on the valuation. And you change the input and the ingredients, and it's hotter or milder, and you do whatever you do. In the end, it's either you find a client, or you find an exit strategy, or you continue alone. In the end, your valuation is as good as what or not is willing to pay. So that's what I want to convey. And in Switzerland, especially in a small country, we don't have a huge home market like the US. And the Swiss are more reluctant to embrace new things, new technologies. Then we have a risk-averse culture.
Yep.
I mean, we have so many great initiatives here in Switzerland. Google has its office in Europe, in Zurich, because of its connection to the Polytech, ETH. And yet, all these initiatives are being paid by big institutions. You don't find a lot of risk-taking investors in Israel, in the US. It's completely the other way around. So it's much easier to actually gain traction. I wish that the Swiss would change, but probably what made us strong in the private wealth or private banking market is now a disadvantage, because you can't mix private wealth management with capital preservation as its goal, and high risk investments. But maybe that's gonna change. I don't know. You have better connections to these investors than I do. You know many more than I do. But that's the big disadvantage. And that's what I'm gonna tell my students. If you want to start something new, do it. Go for it.
Right. That would have been my last question, by the way.
Go for it.
What is like? Did you see with your students? Are they more like entrepreneurial oriented,
yes.
or do you see? I mean, like it always depends on the faculty you're in, so it depends. But I would say my question is like, what senses do you get from your students? Are they more like, we see that there's this corporate world, you can make a lot of money, but it may be on the expense of happiness or work-life balance? Is that something that you see, like maybe it's a trend towards entrepreneurial, towards working for a startup?
If I had asked my students 10 years ago, do you want to start with a big bank or McKinsey or so, that you would have like 80% hands up. That has changed. People want to try something new. They want to change the world. They want to add purpose. Just working and making good money to spend it for luxury goods. The 80s style is gone. Other factors are more important. Can I add value to my community?
Yep.
I want to be a good citizen in my community. I want to help others to be successful. These things become much more important, and I see that at the university right now. And thanks to technology, the entry has been lowered. It's much easier to start something
from
new.
The garage and from home or from your laptop, where we are.
And what I also noticed is that home office is not a stigma anymore. Like 10 years ago, if someone asked me, hey, I want to work 2 days from home, everyone would say, hey, what? Just to stay at home and watch TV? No, because it's easier. He's much more, much more productive.
Yeah, work life, family life.
And works more.
Yeah.
They actually
more
work
efficient.
More efficiently. And that's why I think we need to change the concept of having a big building and everyone comes in.
At 9 sharp.
Yeah. And leave at 5
sharp.
and then jump on an overcrowded bus or train, and being like stressed all the time, getting at home, being nervous. Then they need an hour to cool down. No, that's
and
not.
be annoyed about an email at 11 p.m.
Yeah, exactly. So,
okay, very good. Thank you very much. We don't want it to get too long, and I could speak to you forever.
Me too. Thank you.
It was really fun. Thank you very much for coming on the show. It was a pleasure hosting you here.
Yeah.
Thank you very much for all the audience that tuned in today. Thank you very much. I really appreciate your attention, and I'll see you very soon with a new episode of the Startup Show. Have a good day, everybody.